Get ready to embark on a world of bold strategies, insightful perspectives, and timeless wisdom from the great Swiss masters of wealth. Get ready to unravel the mysteries behind financial success and master the principles that drive markets. Be prepared for a journey that will transform your perspective on money and investments forever. Axiom 1. Risk. Take calculated risks. In the first chapter, the author emphasizes the importance of taking calculated risks when investing. The chapter underscores that risk is inherent in any financial endeavor, but can be managed and mitigated through careful analysis and diversification of investments. Max Gunther argues that completely avoiding risk can result in modest returns or even financial losses, especially in an ever-changing economic environment. Instead, he encourages investors to understand the risks involved in each investment opportunity and make decisions based on a realistic assessment of potential returns and possible adverse outcomes. The chapter also highlights the importance of striking a balance between taking enough risks to achieve significant gains and avoiding excessive exposure that could lead to catastrophic losses. The key, as described by Gunther, lies in taking risks that you can comprehend and manage, rather than succumbing to impulses or following third-party advice without careful analysis. Axiom 2. Greed. Do not become greedy. In this chapter, the author warns about the dangers of succumbing to greed when investing. He highlights how greed can lead investors to make impulsive and risky decisions, often resulting in significant losses. Max Gunther argues that greed can cloud rational judgment and lead investors to seek exorbitant returns in a short period, often disregarding the solid fundamentals of investing. He cautions that excessive greed can lead to speculative behavior and unnecessary risks, increasing the likelihood of financial losses. It is important to set realistic goals and maintain a disciplined approach to investing, avoiding being swayed by promises of quick and easy profits. Gunther emphasizes the crucial need to have a clear understanding of one's own limits and risk tolerance, and to avoid being carried away by greed that may arise during market euphoria. Axiom 3. Hope. When the boat starts sinking, don't pray. Abandon it. In Chapter 3, the author draws an analogy between investing and sailing a boat. He emphasizes the importance of recognizing when an investment is not performing well and taking swift and decisive action to minimize losses. Max Gunther warns against the trap of irrational hope, which leads investors to believe that a poor investment will eventually recover. He argues that it is crucial to accept reality when things are not going as planned and to be willing to abandon a declining investment before losses become catastrophic. Having a clear and defined exit plan when investing is important, and not allowing emotions such as hope and denial to influence financial decisions. Gunther emphasizes that, while it is difficult to accept a loss, it is better to cut losses quickly and redirect resources to more promising opportunities than to remain stuck in a poor investment hoping for an unlikely turnaround. Axiom 4. Forecast. Accept uncertainty. In this chapter, Gunther addresses the unpredictable nature of financial markets and the futility of trying to accurately predict the future behavior of assets. The author argues that while many investors strive to forecast the future based on technical, fundamental analysis or even personal intuition, the reality is that markets are highly complex and influenced by a myriad of unknown and unpredictable variables. The chapter highlights the importance of accepting uncertainty as an inevitable characteristic of financial markets and adopting a more humble and flexible approach to investing. Gunther emphasizes that instead of trying to predict the future, investors should focus on identifying opportunities that offer favorable return potential with manageable risk and be prepared to adjust their strategies as necessary as new information becomes available. Axiom 5. Patterns. Beware of the pitfalls of patterns. In the 5th chapter, the author warns investors about the dangers of blindly relying on apparent patterns in financial markets. He argues that investors often seek patterns or trends in stock price movements, hoping to identify profit opportunities. However, he cautions that many of these patterns are illusory or temporary, and blindly following these trends can lead to detrimental financial decisions. The chapter also highlights the importance of being skeptical of perceived patterns in markets and conducting careful and thorough analysis before making investment decisions. Gunther warns against the temptation to follow the crowd or be swayed by market fads, and emphasizes the importance of relying on a disciplined and principle-based approach to investing. Axiom 6. Mobility. Avoid getting stuck in long-term investments. In Chapter 6, Max Gunther highlights the importance of flexibility and the ability to adapt to market changes when investing. The author argues that while long-term investment may be a valid strategy for some investors, rigidly adhering to this approach can be risky. He suggests that investors should be prepared to reallocate their resources as necessary in response to changes in market conditions or their own financial circumstances. The chapter emphasizes the importance of regularly monitoring investments and being willing to reassess and adjust investment strategy as needed. Gunther warns against complacency and inertia and encourages investors to remain vigilant and attentive to emerging opportunities in the market. Axiom 7. Intuition. Do not blindly trust your intuition. In this chapter, the author addresses the relationship between intuition and financial decision-making. Gunther acknowledges that intuition can play an important role in decision-making, especially in complex or uncertain situations. However, he warns that relying solely on intuition when investing can be dangerous, as intuition is often influenced by biases, emotions, and past experiences that can lead to suboptimal decisions. The chapter highlights the importance of balancing intuition with reasoned analysis and objective data when making investment decisions. Gunther argues that investors should trust their intuition only to a certain extent and always validate their impressions with careful and rational analysis of the financial landscape. Axiom 8. Relationships. Avoid romantic ties in business. In the 8th chapter, Max Gunther discusses the importance of maintaining a clear separation between personal relationships and business, especially when it comes to financial matters. The author argues that mixing personal relationships with business can lead to conflicts of interest, lack of objectivity, and even financial loss. He warns that emotional ties can cloud rational judgment and lead individuals to make financial decisions based on personal feelings rather than objective analysis and concrete data. The chapter highlights the importance of establishing clear boundaries between personal life and business, and of avoiding involvement in financial transactions with friends, family, or romantic partners unless there is a clear and transparent framework established to handle such situations professionally. Axiom 9. Optimism. Be optimistic only in favorable times. In Chapter 9, the author addresses the importance of adopting a balanced approach to optimism when investing. Gunther acknowledges that optimism can be a motivating and positive force, encouraging investors to seek opportunities and believe in long-term success. However, he warns against excessive and irrational optimism, which can lead investors to underestimate risks and ignore warning signs in the market. The chapter highlights the importance of being selective about optimism, reserving it for times when market conditions are favorable and there is a solid basis for positive expectations. Gunther argues that it is crucial to maintain a realistic and pragmatic view of the market and be prepared to face challenges and adversities when they arise. Axiom 10. Consensus. Avoid the general consensus. In this chapter, Gunther emphasizes the importance of avoiding following the prevailing consensus in the market when making investment decisions. Gunther argues that often the general market consensus is based on superficial expectations, passing fads, and collective emotions rather than solid and reasoned analysis. He warns that blindly following the consensus can lead investors to make suboptimal investment decisions and miss out on profit opportunities. The chapter highlights the importance of conducting independent and critical analysis of the market and relying on one's own research and judgment when making investment decisions. Gunther argues that often the best investment opportunities lie outside of the consensus, and that successful investors should be willing to take positions contrary to the crowd when circumstances justify it. Axiom 11. Stubbornness. Avoid being stubborn. In this chapter, the author addresses the human tendency to stubbornly cling to an idea or strategy, even when circumstances indicate that it is time to change course. Gunther warns that stubbornness can be detrimental to investing, as it prevents investors from recognizing and adapting to changes in the market or in their own strategies. He argues that while it is important to have conviction in one's decisions, it is equally crucial to be open to new information and to adjust one's approach as necessary. The chapter highlights the importance of cultivating a flexible and adaptable mindset when investing, and of being willing to reassess one's beliefs and strategies in light of new information and changes in market conditions. Gunther emphasizes that by avoiding stubbornness, investors can be more agile and able to capitalize on emerging opportunities while mitigating the risks associated with an inflexible approach. Axiom 12. Planning. Plan for the worst-case scenario. In the final chapter, Max Gunther emphasizes the importance of being prepared to face adversity and unfavorable scenarios when investing. He argues that while it may be tempting to hope for the best and plan based on optimistic scenarios, it is prudent to also consider the worst-case scenario when developing investment strategies. He highlights that financial markets are inherently volatile and unpredictable, and investors should be prepared to deal with a wide range of possible outcomes. The chapter underscores the importance of conducting comprehensive risk analysis and identifying potential sources of vulnerability in investment strategies. Gunther argues that by anticipating and planning for the worst-case scenario, investors can mitigate the risks associated with adverse events and be better prepared to protect their assets in times of market turbulence. Key insights. 1. Risk management. The importance of taking calculated risks and managing risk prudently when investing. 2. Emotions and market psychology. How emotions such as greed, hope, and fear can influence investment decisions, and how crucial it is to maintain calmness and objectivity. 3. Flexibility and adaptation. The need to be flexible and adaptable to market changes. Adjusting strategies is necessary. 4. Independent analysis. The importance of conducting independent and critical analysis of the market rather than blindly following consensus or intuition. 5. Planning and preparation. The need to plan for different scenarios, including the worst-case scenario, and be prepared to face adversities. 6. Emotional control. The importance of maintaining emotional control and avoiding letting emotions influence investment decisions. 7. Financial prudence. The need to avoid speculative behaviors and seek investments based on solid fundamentals and careful analysis.